Despite inflation's uncertainty, we're talking about three stocks that rise above its impact. We're discussing Costco, Estee Lauder, and Texas Instruments. Let's dive in. Chris, you wrote an article this week on three stocks to buy no matter the way that inflation's moving. And it's pretty fitting since the CPI came out this morning. Numbers were roughly in line with expectations, but I know you and Thomas both believe this may be the calm before the storm. And we'll go ahead and talk about that more on some of our other videos on the channel, the market preview. But let's dive into this. Your first stock on this article was one of my favorite companies, Costco, of course. And we have featured Costco on this channel. I'll leave a link in the description below about that. But I love Costco, always have. The store is always packed, summer, winter, good times, bad times. It seems like it might be the perfect stock. What do investors need to know about Costco?
Well, this one seemed like a no-brainer, Lacey. As I wrote in my article, Costco benefits from its business model as a membership club. So consumers pay the annual dues. Once you pay that annual dues to belong there, that acts as an incentive for consumers to shop there, regardless of what's happening in the economy. One thing I found interesting is that the company's earnings went up year over year in 2022, despite rising inflation. And that trend is continuing into 2023. So, that says a lot of things about their pricing power.
I'll go ahead and get that article linked down below for our viewers, of course, because it is a good one. So dive into that. But yes, Chris, as you mentioned, there was earnings growth of 13% in 2022, even in the face of rising inflation, which honestly, that's impressive to me. But Thomas, what are we looking at here in your eyes? Are there any specific factors other than membership that analysts and investors are attributing to Costco's sustained momentum in the stock market?
Well, Costco certainly is the leader at membership clubs. There's no doubt about that. The shift in inflation and consumer habits is supporting the business. Like Chris said, the membership fees get them to come back. The bulk model of sales forces people to buy really more than what they might need at any one time. So it's kind of a win-win for the business. I think that right now, so long as inflation remains pretty high, the business is going to be well supported. And then when inflation reduces, they'll probably get a tailwind from that as well, because margins may begin to expand.
I think we definitely all fall victim to buying more than we need at Costco. But
Right.
Anyway, Chris, the next stock you referenced in this article was Estee Lauder, and this stock has seen significant decline. Frankly, it surprised me that you put this on your list, but that's why you're here. We're going to ask you about it. Show me what I'm missing. What's going on here? Why did you choose this stock?
Well, in fairness, and I just checked it before we went on this video.
I'll give
Estee
you a
Lauder,
chance to explain.
The stock's up over 4% in early trading today. It was as high as 4.5%. I think it's about 4.2 when we were just doing this. So I'm hoping that Thomas can back me up on this one. But this looks like a great example of a stock being different from a company. This is what I mean. In 2021, the stock shot up to $370 a share. And that seemed to be detached from any sort of fundamentals. And since then, it's down over 54%. But revenue and earnings are approximately the same as they were when the stock was shooting up to $370 a share. And so it seems that investors are trying to find the sweet spot here, and I think they've overcorrected.
It definitely seems like there's a little bit of a disconnect there between financial performance and market sentiment. Thomas, what are your thoughts on Estee Lauder? And I guess kind of looking ahead, what are the primary indicators or trends that investors should monitor to kind of gauge the company's ability to recover from the recent stock decline and potentially regain positive momentum here?
Well, Chris has a good perspective, stock versus a company. Estee Lauder is a blue chip beauty company. It's well established. Business is pretty steady. And really what he's talking about is the spending bubble that occurred in 2020, 21, and then the bubble bursting. I think right now the problem with Estee Lauder is competition. Estee Lauder is well entrenched, but it's not resonating with consumers the way that some of the newer startups are. Ulta and ELF are really doing very well in the space as well. I think Estee Lauder is fine, but I think if I were leaning towards a beauty company, I might be more interested in one of those other two.
All right. And the last stock you wrote about, Chris, was Texas Instruments. You called it an anti-AI play. Chris, why do I want to buy an anti-AI stock when the world is on AI everywhere you go, overflowing with AI? does make it make sense to me, Chris. What are you seeing with that one?
Sure. I mean, I called it an anti-AI play because the company is actually leaning into that as well. They made it a point to say in their last earnings report that they're not actively using AI in their solutions for consumers, or customers, excuse me, which is interesting because they're actually just saying, yeah, they're not. When a lot of companies are trying to find any reason to talk about AI solutions, they're deliberately saying, no, we don't use AI. But when you look at a company that can be a good stock to buy no matter what happens with inflation, here's a company that's the market leader in analog and embedded chips. They have a huge customer base. I think it's over 100,000 customers. So you're going to have stable revenue, you're going to have stable earnings, and this company is dedicated to rewarding their shareholders with dividends and stock buybacks and the whole 9 yards.
Okay, so as investors are considering all of their options, what factors are making shares of this stock more appealing, especially when sentiment is turning towards a more risk-off tone? Thomas?
Well, I think the takeaway from what Chris is saying is that you shouldn't buy the AI hype. You should buy AI longevity. Like NVIDIA, AMD has AI hype. There's definitely a bubble forming in some of those areas. But with Texas Instruments, we're talking about embedding AI into our products over the long term. So once the current AI bubble kind of runs its course, Texas Instruments will still be there producing these chips for the products that we use every day, and that will sustain the business over the long term.
All right, well, there you go, guys. These are 3 stocks to buy no matter which way inflation moves. This continues to be a sound strategy for investors that they can benefit from. Like I mentioned, you're going to want to check out Chris's article. I have that linked right here down below. Let us know in the comments what you think. Are you grabbing onto any of these stocks? Are there others you'd throw on this list? Let me know if you're surprised by any of Chris's picks, as I was. But thanks for tuning in. Please don't forget to check if you're subscribed to our channel yet. Your support does allow us to continue providing you with the latest news. Thanks, guys. We'll talk to you soon.